Hello and welcome everyone to Gold Asset of the Day for the 15th of September 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the middle of the week here, what do you need to be aware of? First of all, as it relates specifically to gold, hedge funds and money managers in the last week, they've trimmed their overall net long position by 3%. So of those hedge funds that do have a position on gold, 68% are currently long. For those of you that watched our week ahead commodity report, we have seen many of the predictions and expectations play out so far this week. So first of all, we have seen that dollar strength come back in. The US dollar broke out to 2-week highs at the start of the week. That has put pressure on gold, on platinum, on silver. Platinum prices are currently down 2.5%. Gold has been very range bound so far this week, and silver prices, they dipped back down towards $23.50 per ounce. Gold prices, we saw 1,780 US dollars per ounce tapped on Tuesday, and then subsequently a bounce back up to 1,808 US dollars per ounce. Currently gold is trading just above $1,800. Now the gold to silver ratio has actually broken out to 2-week highs, back above 76-1. The dollar index is currently trading at 92.60, putting slight pressure on many of the precious metals at the moment, in line with expectations. As we get towards the end of the week, we have quad witching in the USA, which will cause typically inflows into the dollar that can create more pressure on a lot of metals. Alongside that, going into the beginning of next week, we have a public holiday in China over Monday through to Tuesday. And also next week on Wednesday, we have the FOMC statement. Many of these events can see capital flow back into the dollar, particularly with the end of quarter profit taking that typically takes place as we get into the third week of September, as we go into next week. So essentially, it's very common at this time of year to see metals under some pressure here, the dollar pick up momentum, and you can of course capitalize on that. Now, as we highlighted to you on the week ahead commodity report, we've taken advantage of that slingshot move higher at the end of last week, an impulse move on copper, where he broke out 3.5% to the upside, broke back out to multi-week highs. That enabled us over 5 trades to bank 1,500 points profit. So of course, for every 1 lot contract you'll be trading, that's $15,000 of profit. For every 10 lot contracts you would be trading, that's $150,000. So as far as it goes for the rest of this week, as it relates specifically to gold, I would essentially continue to look out for range-bound price action here, especially if we see the US dollar pick up further momentum towards the end of the week and towards quad witching and into next week's FOMC statement. So gold right now, if we can pick up momentum above 1,810 US dollars per ounce, that does open up the door back towards the monthly highs, which do reside at 1,830 US dollars per ounce. So I keep an eye on gold miners at the moment, such as GDX, which is picking up momentum, trading back up 1-week highs. If that is able to break out higher, you could often see gold follow suit. However, if gold breaks and closes back below 1,800 again, and we see the dollar pick up momentum, which we are expecting, you could easily see gold come back and revisit 1,780 US dollars per ounce. Essentially, we're moving within a very clear 300-point range at the moment. But again, just be mindful that our expectation is, as we go into next week and as we get towards the end of the month as well, typically the dollar does pick up momentum to the upside. That's not to say gold can't rally with the dollar to the upside. Often it can, but I would look out for other metals such as platinum, palladium, silver to come under more pressure. Again, the gold to platinum ratio and the gold to silver ratio are favoring gold to outperform those metals in the short term. And of course, this is where you want to be aware of the overall positioning from the hedge funds, the money managers, banks and institutions out there, which right now has seen a significant increase in dollar long positions and also a reduction in positions on the metals over the last week. And we're already seeing that play out in the market. This is, of course, where you want to have access to data, statistics, research, alongside that market intelligence, understand the daily, weekly, monthly, quarterly cycles for each commodity. Alongside that, be aware of key macroeconomics, fundamental drivers in the market, the news items which will have the biggest impact on commodities. Alongside that, be aware of capital flows in the market, the intermarket correlations, the ratios, areas of liquidity, the sentiment in the market, and then of course understand and know how the hedge funds, money managers, banks and institutions are positioned. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.